2019th, and it's 9:35 a.m. in London when I'm doing this market update. My name is Alejandro Zambrano, and I'm the Chief Market Strategist with ATFX based here in London. And it's time to take a look at the markets. Before we start though, let me just make sure that we are live. Yes, it looks like we are. So guys, good morning to you, or maybe good afternoon. So it really depends on where you are in the world. Traditionally, we have traders obviously from the UK and London, where I'm based, and the rest of England, UK. And then we have a lot of people tuning in from places like Australia, also Southeast Asia, and parts from Africa, and even Americans actually. If you're totally new to this morning update, I used to do it pretty much around the same time, literally every day for dailyfx.com. And at that point, we used to have maybe 300 people watching this live, and then some other 500 that will look at the recording after that. Okay, so let's kick off, and we're gonna begin with the euro, and the euro is what you can see on your charts right now. And as you can see here, the market is bullish. So we talked about a head and shoulders here last week. So you got yourself a left shoulder here, and then you had right shoulder, sorry, should be the other way around. So you have the right shoulder here, and then the left shoulder here, and then you had the head here. And here we pushed all the way up, and then all the way down, and then not all the way up, but up and then down, and then hit that target. The target here was derived by looking at the difference between the head and this red line, which is what we call the neckline. And that's how we got that target. And we reached the target already on Friday. The market is now continuing to trade upwards, and it looks to me that we could potentially go even higher. Because if you look at the euro from a purely technical perspective, we're dealing with a sideways market. The market is trading sideways between 111.75 and 114.47. You can even argue that it's in a bigger range. Fortunately, very, very boring times for trading Forex, but it's the way it is, right? And I think this can continue to go upwards. Maybe next stop will be something like 13.50, which is because it's just a psychological level. And then you have maybe up to 114, which is up here. And then we'll see. I don't think we're gonna go much higher than that. I think we're just gonna remain range bound, unfortunately. Here's GBP versus the USD, and if you wanted to buy, this is the time to buy. I think, obviously because of Brexit, everything is much more sort of difficult to trade. But it looks like we're going to have a delay of Brexit until 31st of October, I think it was. So that gives Tories and Labour members and PMs enough time, or not hopefully enough, but a good amount of time really to sort of talk and negotiate and try to find some way forward so the UK can have its Brexit. And for now, because that sort of probably is not gonna garnish any headlines in the short term, I think that's gonna probably cool down, and maybe people are gonna focus on other things. Now, the UK economy itself is not doing that great. German economy either is not doing that great. So the euro itself is not doing that great. But technically, above 129.50, still dealing with a bit of an uptrend. And I'd rather be bullish than bearish from these levels. Here's the dollar versus the Japanese yen. And it's one of the two head and shoulders we identified on Friday. We identified this one. We also talked about the one in the S&P 500. And you get yourself a left, right shoulder, and head. And that was the break here, and push to the upside. Could go down a little bit, and for some reason, I just noticed here my analysis has not been saved, but I'm bullish about 110.78, and you know, we could easily have like a 50% correction or so. Maybe we go down to something like 111. Yes, say 111.50. Let's make it 45. I think that's better. And then from these levels, most likely heading upwards, like this. 113, 113.50, and then potentially that head and shoulders target. So this market continues to be bullish, and again, I'd rather be long than short. Gold is under a bit of pressure. and could become really interesting to short sell, maybe in the next few days. Head and shoulders, head, left, right shoulder, neckline here. We are trying to slide below the neckline once again. Now, what's important here, I always look at trend lines like these ones in conjunction with other levels, especially horizontal levels if they're available. Like here you have the March low, which also happens to be, I think, the April low. So pretty much the same level. So horizontal support and resistance levels are easier, not easier, but more important than any trend line, because the trend line depends. If you put it through that little low, if you put it through that little low, you get different prices. And some people don't even bother to do that. They just look at the closing prices, which means that that's their trend line. They're already having that breakout. But and the problem with that is that when you try to trade, it's important you identify levels that is going to affect the most amount of people. And it's definitely, if you look at people that look just at the closing prices, well, maybe they are getting busy now. But then the people that just took from the low and this low here, they're not really active yet. And then you people that wanted to take this low and ignoring this one, they're definitely not busy anytime soon. So you see you have three different levels there to take into account depending on how you draw the trend lines. And that you don't want to deal with, because that's not these three levels are not important enough for everyone. On the other hand, take out the low, there's no ambiguity really sort of which is the important level here. This is a low, so a horizontal level. Everybody understands it's a horizontal level, and it also happens to be the low. If we trade below here, we're gonna go to the lowest level since one of the lowest levels since early January. That is really very easy. So you always need to combine the trend line and the with the horizontal level. Not always, but 9 out of 10 times. That's what I would do. I don't trade exclusively on trend lines like that. If you do that, you'll find yourself in not too much money. After doing that, I've been doing this 2006. So if you, well, not even one, I would say maybe 1 or 2 years. If you have 2 years, even if you have like solid money management, then you can get in trouble. There's just some specific markets like crypto. Sometimes you can get away with it, but it's just because there's such a bullish trend anyway. That's just it. All right, crude oil. Crude oil is doing okay. So we talked about buying on a dip, and I'm gonna insist on looking to buy at a dip. Of course, if you scalpers and things like that, you have a 1, 2, 3 highs here, triple top, maybe break to the upside can, cause the market to go up a bit, but it's a bit overbought. I don't think people really want to be buying here at these levels. I'm looking for that pullback. It's gonna happen at one point, and then it's gonna be like, I think we're just gonna go down to these levels. That's just it. I'm gonna even push down the entry level a bit now, because it's been here for too long now, this market. So the longer it stays here, people are buying, but then when they notice that they're not making money on these trades, they suddenly start to get panic and they sell off, and then we have a steeper slide. So I'm taking fib from the March 28th low to the current April high. You get these 3 fibs, and I'm focusing on the 50 level. I think that's where people will look to buy if they can. This is the S&P 500, and this is that small head and shoulders I discussed. Get yourself a left shoulder, right shoulder in the head, and we had that breakout on Friday. It's looking good. The market can easily come down here and sort of test that breakout. Why? Because it's a small short-term pattern. The market doesn't have too much respect for small short-term patterns. It focuses on the big levels. So we can easily go down, but I would argue, and I'm gonna actually update all of this. I think if you're trading on the back of that little setup, then as long as you trade above 28.81, which is the right shoulder, I think that remains active. And I think if we go down, people will try to buy. Now, as for the longer term levels, which I think are more important, I would reduce the trend of funding level now to from whatever level it was just 2 seconds ago up to here. Initially, the stop loss was here, and you might remember we said look to buy here. We reduced it, and then off to here, and then here somewhere, and now it's up here. Because what's happening now as well is that we're really close to the to the all-time high. Yes, all-time high. Tell that all to the perma bears. They don't really understand this, but very close to the all-time high, and you know, we need to be more careful here. The ideal entry, of course, would have been somewhere down here almost, but unless you really knew what you were doing and were really confident, you would not have been buying down here. So yeah, so what I wanted to say here is that we're probably going to continue to head upwards here, and probably going to head up to something like 29.18 and maybe a little bit higher, and yeah, it's a little bit dip and then potentially upwards. Okay, what else here? I think German DAX, that is what we need to focus on. And this is the German DAX, and as you can see here, the market moved a little bit lower here, and almost revisited that breakout point. And but for now, it sort of managed to stay away from that level, which is good. I guess if you bought on the original head and shoulders pattern, you're really happy about that. I think what we can do today is we can reduce the trend funding level to something like 11,824. That means if you did buy on that breakout, you're now pretty much a break even. And it's a difficult situation. For me, it's been really difficult since October, really. It's quite a long time, because I managed to get involved in a lot of trades like these ones, but because I'm looking for that big picture move, on the way I get shaken out. And here you just need to make your own call. Like if you did buy here, you should probably be up with maybe 1.5 times risk reward ratio profit right now, if not almost 2. So the question is, do you want to keep this one for the target here at 12,457, and then you have the actual longer term target, which is 13,097 up here. Yeah, like you want to keep it for this or this level. Obviously, if you keep it for this level, you're gonna get that very nice risk reward ratio we discussed before we had the breakout here, and also last week. But unfortunately, you may be shaken out before that. As for this right now, traders that are not involved, I think they will try to buy, maybe from 11,940, so somewhere down here. Stop loss, we're probably gonna go here. So probably gonna go down, and then potentially upwards again. That's what I would argue. And I think that's pretty much it. Let's see now if you guys have any questions. As well, if you are new to this, don't forget to check out our YouTube channel. See if I can just load my own channel page. If you're new to ATFX, by the way, guys, ATFX is actually one of the larger brokers in China. Very well known over there, and they actually set up a London office, which is quite big as well. And we have offices they have offices in Dubai, Hong Kong, mainland China. There are about 300 people working for ATFX. So very well established, very good spreads if you check that out on their homepage. Now, don't forget to subscribe to our channel. And let's see now if you guys have any questions. So we have about 7 people watching right now. 4 likes, that's good. That's a very good start. Thanks so much for that. If you have any questions, just put it here in the chat box. Otherwise, I think we're gonna be wrapping up. So we have, there's a deal ongoing right now with ATFX. So if you switch to ATFX, then you will have access to 2 coaching sessions with me. And you will also have access to a premium course. Now the premium course, I'm a bit ahead of myself because I haven't finished wrapping that up yet, but it should be live maybe I think in about 1 month's time, so on the 15th of May or something like that. And I think we're gonna have some, sorry, in about a month from now we're gonna have, it's about a 3-hour crash course where I really teach the essence of my trading style. So if you want to understand how I'm trading, then that could be something good for you guys. It's totally free as long as you open what we call an Edge account with ATFX. And if you check out here under atfx.com/UK/England, you'll have the retail edge account. Now that's if you're based in Europe. If you're not based in Europe, they do have other things like like offshore and cyberspace as well. Obviously, Cyprus is Europe as well, but they have different entities as well. Anyway, what's really cool here is just these spreads: zero 0.6 in euro, 0.7 in dollar yen, 0.6 in GBP. In fact, in GBP pairs, when I did a comparison, I had a real FXCM, real IG, and real CMC account open on GBP pairs. In general, ATFX had tighter spreads. The cool thing as well is that they don't just have tight spreads on these ones, which are the majors. If you look at the Forex miners, they have tight spreads there as well. Very competitive. And even on the Forex exotics, they have very tight spreads. If you're like me, you're trading euro dollar one day, and then you're trading dollar Singapore dollar the second day, and then you're trading something like the Chinese A50, and then you trade maybe the Indian rupee, things like that. You really need those tight spreads. If you don't have those tight spreads, you'll see how much more expensive it becomes. Okay, so we don't have any questions here, so I think we're gonna wrap things up. Guys, I want to thank you so much for watching, and as well, don't forget to like the video. And if you're new to YouTube and just want to ask questions, you just need to create your own account. If you don't have your own account, I understand. I did not used to have my own YouTube account until I started to broadcast about 2 years ago on this. It's very straightforward, very easy. It's free. You can ask any questions, and you'll have access and be able to talk to people like me. Okay, we're gonna wrap things up. If you have any questions during the day, send me a message via my Twitter. That's the best, at AlexFX00. As well, if you want to check out the spreads with ATFX, then that's the link over there. To have the same spreads with a big broker that I used to work for, you need to put $25,000, 25,000 euros, or 25,000 pounds to get access to the same spreads that you're getting here with ATFX for just 5,000. The 5,000 is not a cost; it's just what you need to have on your account, because we need that, or they need that, to compensate for the smaller spreads. Okay, guys, thanks so much for watching, and I'll see you guys tomorrow, same time, for the next webinar here at ATFX YouTube account. Thank you very much, and have a good day. Bye-bye.